Hello and welcome everyone to DigiTales episode 20, season 2. My name is Faizan, Syed, founder and CEO of East River, and today I have someone who is an expert in all things finance. He was a corporate M&A lawyer for one of the top law firms in North America. He is a graduate of the Cornell University's law school, and he and I have known each other for 20 years because we went to UVA together. After law school, he went on and founded and launched a company called Bread, which was then acquired and finally taken public. And now, after having done all of that, he is now advising tech startups, companies in the Web3 world focused on finance under his consulting company called Blue Ridge. This is Faraz Rana. How you doing, Faraz?
Faizan, good to be here. Thank you for having me on your show. I'm excited after many years to be sitting down and having a meaningful conversation with you. So thank you for having me here.
So the one thing that I want to point out here, Faraz and I were talking a couple of years ago, and I remember Faraz said, you need to listen to this podcast. It's called How I Built This. It's by this guy named Guy Raz, and he interviews all sorts of people about their journey, about entrepreneurship. And I started listening to that podcast, and I was so inspired by it that I said, you know what? I want to do the same thing in our market. And that is where DigiTales came about from. So for us, you were the inspiration, or you were the reason I got the inspiration for DigiTales. So welcome to the show finally. This is episode number, I think, 45, if I don't have it wrong.
Good for you. Good for you. First of all, that podcast is great. If anybody is in startups or wants to be an entrepreneur, this guy interviews people on their journey. Faizan, you're doing that with so many different people, and you've had some very high caliber people on the show. So I don't know what I'm doing here.
You're the exception.
I appreciate that. I had a friends and family invitation, so I appreciate that. Thank you.
Now, so walk me through this. You're at this major, one of the top corporate M&A law firms in the US, globally, in fact. And, this is a firm where you get your own office, you get an expense account, you get taken care of and you get spoiled. You also get worked to the bone. How do you move from that really cushy lifestyle and just suddenly decide to go assemble a desk and sit in a room with 3 other people and say, all right, I'm going to do the startup thing? And that too, after 7 years of working as an M&A lawyer.
Yeah. Faizan, my background. I'm probably the most atypical person to make that move. I had a very linear career path. I went from UVA to law school to a traditional law firm. So point A, point B, point C. Very, very linear, very reactive to sort of what I expected I was supposed to do. As an M&A lawyer, what you do is you help private equity funds buy and sell companies. Mm-hmm. And so what I would do, my favorite part about the job was reading up about the company that was being acquired. So I would read about the financials, the product they were selling, the founders, who was on the management team. The problem was that wasn't my job. My job was to read the merger agreement, which is a 100-page contract, and corporate lawyers get paid a lot of money to look at every fine detail of that merger agreement. What I realized after being an M&A lawyer for many years is what I really loved doing was reading up about these companies. And what I eventually developed an itch for is building one of these companies. What I wanted to do was have my name on a company that someone else was looking at to acquire. And that's an itch that I think a lot of people have, right? As a lot of people who work in advisory businesses want to do something, want to build something as their own. And I had that. So back then, this is in 2013, startups were not a thing unless you worked in Silicon Valley or you're a software engineer. So, I left my law firm without a real story to tell. Usually in my profession, you leave and then you leave to go to a bank or another cushy job. I left telling my partners at my firm that I was just going to go and build something. And they said, mm-hmm. What are you going to build? And I said, I don't know. And at that same conversation,
you should have said, I'm going to build a desk.
Right.
From IKEA.
That's right. And like I had the same conversation with friends and family. Fazan, I think you and I had the same conversation as well. And a lot of my family and friends, like, question this, like, why are you doing this? But I think that's a journey that any entrepreneur goes through, any person who works at a startup goes through, where you leave sort of this linear path and you take a detour, and people ask you what you're doing, and oftentimes you don't have a good answer for them,
Right.
but you have an itch you want to scratch. So I went through about 6 to 9 months of this transition. So what ended up happening is I met the two co-founders of this fintech company, and they said, "Look, we're starting a regulated fintech company, and we want a lawyer to be part of the founding team because we want to be very smart about the regulation." And they looked at me and they said, "We've never met a lawyer who left a law firm to work in a WeWork office with 12 other people half his age. So you're either really, really, really committed to doing this, or you're crazy." And we'll find out which. And luckily for everyone, it was more of the former.
Right.
But for me, that itch of wanting to build something was very real, and so that's how I ended up working with them.
And you are trying to build something in a sector you are not a specialist in, right? This company is called Bread. It's a financial services company, which in itself is, confusing. I mean, was there a point that you thought that this bread may not bake and all you'd be left with is a bowl of batter?
I love that analogy, bowl of batter.
It's not a technical.
Is that a technical? Sure? It's not a startup. Got it.
I mean, imagine you've got all the ingredients there, and then there's this bowl of batter, and it's not a fully baked loaf of bread. And you're like, my startup never sort of got off the ground. It didn't bake itself into, let's say, this, highly valued entity that is now going through a series of acquisitions or is being listed, in an IPO. Was there a point in the entire journey that you're like, man, this might not happen?
Professionally, for myself, no. I was happy from day one getting to build something that was my own. I can count the number of times on my hand when I actually thought it would succeed. So every day you wake up and deep down inside, you believe that this is not going to work out. Because every decision you make is a decision that's never been made before.
Right.
Nobody has done this exact same thing with those same people, with those same circumstances. So every decision is a new decision, and you question that decision every day. And you're one mistake away from failure. You're, one decision away from going down a wrong path. And so every day is a day of coming to terms with the idea that this thing may not work out at the end. And by the way, that is the complete opposite of the narrative that you have to give to the world. When you work at a startup, when you're an entrepreneur, the narrative you give to the world is, hey, this thing is going to be big. That's what you tell your investors. That's what you tell your customers. That's what you tell your family and friends, your significant other. That's what you tell everyone. And so, dealing with that is why working at a startup or, founding a startup or being an entrepreneur is very difficult, because you don't know when it's going to succeed, and you question every decision that you're making.
What this takes me to is the fact that, look, you did both. You did the corporate life like most people do, the linear path, the college, grad school, corporate life, and then suddenly you pivoted into a startup, like literally a startup with 3 people, right? Having done both, and now looking back, do you think what is the ideal path? Is it if you have the itch to be an entrepreneur, start something out, is the ideal path to start it up before college? Does it make sense to go to college and spend, let's say, all that money to getting that degree, which may or may not help you in a startup environment, right? Because you learn everything on the job. Or is it best to take that linear path, go to college, work somewhere, learn systems, processes, communication, and then go out on a limb, let's say in your late 20s, early 30s, and say, all right, I'm going to give this a go on my own? Because if I fail, or if I decide not to do it, I still have, maybe post 35, 37, I still have another 20, 30 years to go. What's the right mix?
Yeah, the short answer is there is no right mix. I think it's very much a personal decision. Faizan, I've never met anyone in the corporate world or just generally who hasn't had that itch, right? I think everyone goes through a point in their careers where they look at what they're doing and they think, I could be doing something else. I could be doing
Right.
something bigger, better, or I could be building a business, or I want to do something I'm passionate about, whatever that may be, right?
Right.
Everyone goes through that. And I don't think there's anything wrong with ignoring that and saying, work for me, whatever I'm doing, my job is a means to an end. It's going to give me financial security. And then I can do those things on the side and not make that a career switch. I think that's perfectly fine. I mean, I made the switch because professionally, I wanted to have that be a part of something that I could be proud of later on.
Right.
But, it could have gone wrong. And, there are so many points at which I think luck played such a huge factor in the eventual outcome. If it did go wrong, Faizan, I would be back at a law firm and we may be having a very different conversation about my career path. So I don't think there's a right answer as to if you do have that itch. Number one, should you be taking that plunge?
Right.
I don't think it's right for everyone. And I think a lot of people choose to ignore it and choose to kind of pursue their hobbies on the side. But as to when you should be doing it, I am biased because I do think work experience gives you that muscle, that struggle muscle, that work ethic, to be able to go out and do this on your own. Because as you know, being an entrepreneur is no less hard work than working a corporate job. In fact, it's way more.
It's actually a lot more work because you're constantly working, unlike corporate jobs. Because, corporate job, at least you're like, what? There's three other people above me. I can pass on the buck, and when I go home, at least I can switch off. Here, as an entrepreneur, as a business operator, as a founder, your business is always on, and so you're always on.
100%. If to answer your question, if you feel like you're ready for that, personally, then absolutely take the plunge. But make sure that you have enough of that muscle memory. You've done enough to be able to do that out in the real world. Whatever your sense of security is, for a lot of people, it's their family. For a lot of people, it's financial security. So, having worked for 6 years, I was able to take a pay cut and, sleep on a couch and, not have a salary for a few months to be able to do that. And for a lot of people, it's, whatever their anchor might be, but make sure you have an anchor that you hold on to before you plunge on this journey. And then as you're going in this journey, I think important to maintain some kind of sanity, something that gives you control or a sense of control in your daily life. So for me, this is going to sound very trite, but I started running, when I joined the startup. And for me, running was a very methodical, mindless activity that I did every morning. And it cleared my head and gave me a sense of control and accomplishment before I embarked on a day that was a complete haphazard mess every single day, right? Completely unstructured environment. So, besides your big anchor, I think you need a daily small anchor as well that just keeps you grounded every day.
And I think that's a very good point you bring up. Like, I think a lot of us forget that, you need wins, and your wins keep you going. And I think having that win up front in the morning, whether it's a run, whether it's meditation, whether it's a swim, or whether it's just maybe spending time with your kids before they go to school, whatever that thing is, or your dog, taking the dog out for a walk, there needs to be a win where you feel like you've started your day on your terms and you've done your thing for the day. And now you can take on the rest of the world. I think that's a very valuable insight, because a lot of us entrepreneurs forget that. We're like scrambling till the end of the day, and then we want to rush back into it, right? Without that break in between. Valuable insight. Now tell me this, we're going to switch gears. You went from law to fintech, and now you're kind of dabbling in this world of crypto. Walk me through what is fintech? I mean, everyone throws the word around, right? And I just want to make sure that everyone understands what it really encompasses and what it means. What does it mean to you?
Yeah, fintech is using technology to make everything you know about finance in your daily life better, easier, faster. That's all it is, right? If you go open up a bank account in Karachi right now, you have to fill out multiple streams of paper. It
Mm-hmm.
takes a week. You have to get approvals, everything. It's a whole process, right? Fintech says we don't need to do all that. We can use
Mm-hmm.
technology to make that a immediate process right away. We can do all of this online. And so fintech is nothing more than that. People make a fancy thing about what fintech is. Take everything you know about finance today, whether it's banking, whether it's opening a bank account, whether it's getting a loan, whether it's buying a house, everything you know, and just say, how can I make this faster, easier, better using technology? That's all
So you're
fintech.
saying it's finance without the paperwork, basically.
Um, Finance without the paperwork, but faster, easier, and then also more foolproof, right? What technology does is it removes the human error and the human fallibility in the
Mm-hmm.
equation, right? Papers can be forged, papers can be
Mm.
lost. Um, and what technology does is creates a foolproof mechanism where you actually understand this. So, not to veer into a different topic right away, but that's sort of why blockchain, which is a new version of fintech, has become so ubiquitous now, because what blockchain does is it creates a ledger that is foolproof, that nobody can tamper with. It's immutable, and that's why crypto is becoming a thing now.
So, like, okay, look. So, what happens is, I've, thanks to you, right? I've started educating myself on this space. And what I found is that people get so technical so quickly that the layman and not so smart people like myself, it just kind of goes over our head, and we're like, wait, what is smart contracts? What is decentralized finance? How are these ledgers working on the blockchain? I mean, if you were to give me, a layman, a simple, couple of sentences explanation of how all of these things work and how it leads to decentralized finance, right? DeFi, or whatever they pronounce it as. How would you explain
Yeah, it's difficult. So let's use an example. So Fazan, I'm going to send you 10 US dollars right now, right?
it? Okay.
If I use the traditional financial system, what happens is I go on my app, I send it to you, you get it a day later. What's happened in the middle is the financial system has said -10 for Faraz plus 10 Fazan, right? There's a
Right.
ledger that the financial system is keeping. We're not exchanging cash, but there's a database that everyone is keeping, and this everyone is a financial system, right?
That's the clearing houses between the two
Clearing
banks.
houses, your bank, my bank, everyone
So,
is,
so in that traditional system, there's your bank, there's my bank. Your bank has a clearinghouse, my bank has a clearinghouse. And so now
yep,
there's four parties right there.
four, and then multiple more parties. But you group them all together as a financial system, right?
Right.
There's a lot of parties, and there's basically one entity called a system that's keeping this ledger. Why do we need the ledger? Why do we need to say -10 me plus 10 you? So that I don't go out and spend the $10 elsewhere, and you have 10 to spend, right?
Right.
Everything in finance is done on. Nothing is done in cash anymore. I mean, people use cash, but everything,
It's
is
online
done.
debits and credits.
So what blockchain does is says we're going to get rid of this one intermediary called the financial system, and this is what Bitcoin does, not blockchain, but Bitcoin, and says let's get 10,000 people in a room. They all sit in a room together. When I send you money, they say, okay, write down -10 for us. And when you receive the money, they say +10 Fazan. Everyone holds up their piece of paper. They say, we all agree? We all agree, right? So what blockchain does is it removes the intermediaries from the equation, and it gives the responsibility to a lot of different people, right? And so
Is that
if
what mining is?
No, mining is different. So mining is, and this we can go down a rabbit hole of what mining is. But the people you have in that room, right? The
Yes.
10,000 people, you need to give them, you need to do two things. One, you want to make sure that the people who go into that room are the right people. It's not every Joe Schmo off the street. It's a person who has an incentive to do the right thing. They're going to do their
Right.
job. So what you do is you make them do jumping jacks outside of the room, right?
Right.
You make them do literally jump, and that's what these computers do. They do computational um,
Got
uh,
it. So they're
equations.
invested. So you're
They're-
saying that they're heavily invested by doing all of these jumping jacks, which is the computations sitting outside. And
Right.
once they do a computation, they are rewarded by getting access into the room and a fraction of a Bitcoin.
That's right. So they come into the room, they do their job, and they get a fraction. So you need a mechanism to weed out the people who don't want to do this properly. And then when they're in the room, they get a reward, right? And so that's how the blockchain technology generally works.
So now the miners are in the room, they're basically authenticating transactions, and this is all happening real time. Like there's no 24-hour period in which the money needs to move from me to you. It's instant.
Right. That's right. So you're getting rid of all of the, so what, crypto is the wrong word. I think it's really blockchain technology that's been around for a decade, that's revolutionizing all this. And what is interesting about this world is, if you think about it, the technology can decentralize anything, right? Anything there's sort of removing intermediaries from the equation in other forms.
Give me a random example. Like give me something bizarre just to kind of highlight the point.
Yeah. So, for hundreds of years, you've had these things called companies, corporations,
Right.
right? They're they're a legal artificial structure created out of nowhere. As a corporate lawyer, I'm deeply interested in the history of the corporation. I may be the only one in the world.
Yeah.
But what a corporation does is it pools money together, right? And it was done so that people could build railroads. People, the East River Company could go out and explore India, and that's sort of what led to the to where we are today in Pakistan. And so the problem with companies a lot of times is there's a misalignment of incentives. So the people who run the day-to-day operations of the company, management, is not answerable to the shareholders who put their money in there, right? They're not. They're running. So you have these examples of corruption, CEOs who get paid $100 million even though they did a bad job. So you had this new evolution of a company called a DAO, Decentralized Autonomous Organization. Basically what a DAO is, it's the 10,000 people sitting in a room together.
Mm-hmm.
They're collectively voting on a decision that a management of a company would make in real time. They're doing this every day. They're collectively making these decisions. And the decisions are then effectuated by software code, computer. A little out there, right? But you imagine a company where you get rid of management, right? And the shareholders are the ones that run the company day to day.
Yeah, but how does that work? I mean, you need a leader. Like, I mean, we've learned this at grad school. We read books about leadership, right? Where there's a leader, there's that one person who drives the charge, sets the tone, sort of motivates the troops. I mean, you're saying that you're basically eliminating a leader in this DAO concept.
Right. So
who sets the tone then? Who motivates people to do the right thing? How do people collectively choose what's best?
Yeah, good question.
And is there a precedent in history for this?
I mean, there isn't for this particular structure, right? I mean, this is very new, but there is. So to answer your question, what blockchain is advocating, what DAO is advocating, is that power shouldn't be sitting in the hands of one person.
That makes sense. I mean, I completely agree, because if it's my money and I'm investing in you and you're taking the decision, your day-to-day decision making doesn't take into account what I want for my money. Your day-to-day decision is going to be like, okay, I want my bonus at the end of the year. Right? So the incentives are misaligned. I completely get that. But we've seen I mean, basically, if democracy is an example of a system where you're giving the decision making to the people, right? It's a similar concept. Yet, democracy can be bought. Couldn't that happen in this case?
Yeah, I mean, it could, right? I mean, you can have one person in that room. Again, back to this analogy of a lot of people sitting in a room together. You can have enough people be corrupt and take over the system. But the idea of blockchain and crypto, to take it a step back, is that rather than give power to a centralized intermediary, let's decentralize that power, right? So you're saying, Faizan, you need a leader to, to keep up morale. You need hierarchy. You need all that. Whether you agree or not, this blockchain technology is basically saying, no, we're going to decentralize all of that to everyone, and we're going to rely on the collective mass to make decisions. Now, is there a precedent for that in history? Absolutely. So we've been moving as a society to a more decentralized society over the last 30, 40 years, right? And that started with the internet, right? The internet disintermediated information. Before, you had to go to your library, your encyclopedia, your local news source for information. Now you can go directly to the source, right? And on the internet, there's a lot of garbage out there, right? But through the free market system, the good stuff comes out on top and becomes the stuff that everybody should follow, right? Or
makes sense, yeah.
Right. So same thing. You can apply that concept to anything. You can apply that concept to how a company is run. You can say, look, the companies who make consistently good decisions through the collective power of everyone who's invested in the company will be the companies that continue to succeed, and the companies that don't will fail. And so, whether you agree that this is efficient or scalable, it's already happening. And I think the question we have to ask ourselves is whether a more decentralized society is good for us as people or not, right? And
Look, I think yeah. So I mean, finish that thought.
No, I think there's a lot of research and articles written about how we as people are lonelier today than we ever were in past generations, right? Hundreds of years ago. And why? Because I think we've removed those intermediaries that actually served as a social function. So back in the day, if you wanted to read about something, you went to the library and you spoke to your librarian, and he or she knew who your family was, right? If you get rid of banks, the person
you don't go to the bank.
You don't speak to your favorite banker, right?
That's right.
Pakistan, and I've been trying to get my mom to download an app where she can use banking directly on her phone, and she said, no, I like going to the bank, So if you remove all of these intermediaries, the banks, the financial system, the places where you get information, the company's management, CEO, a person you can look up to and say, this is the kind of role model I want. Remove all of that. You have more autonomy, more personal freedom. But on the flip side, everyone is isolated, right? And everyone is kind of their own world and their own boss. And so is that a better world to live in? I don't know, but it is definitely moving in that direction, whether we like it or not. So I think, if any of your listeners are intrigued by this, I think a business idea that would do exceptionally well, or I think an industry that's going to do exceptionally well, is social wellness, right? If you have a metaverse where everyone is living in a digital world and they don't have real human interaction, the idea of wanting to interact with people, going to a retreat, going to a place where you give up your phone for a week is going to be something that I think people crave a lot more.
So, I mean, look, and so we bought an Oculus in the office, and we basically are spending time in the Horizon venues and engaging with people from around the world. And it's fascinating sitting in Pakistan, Karachi. You get inside the Oculus, and, my team loves it because in the Oculus, they're now in this Horizon venue and they're meeting people from around the world, having conversations. I mean, my media team had an entire meeting with a bunch of media guys from the US and Italy inside one of the venues in Horizon. And I'm thinking to myself, wait a second. So if they're sitting there, if transactions are happening there, if you're saying the DAO, right, the decentralized autonomous organization, is can now operate like this, and everyone's just sitting with the little, sort of oculuses. There is zero social interaction. You're just getting up to go. In fact, you don't even need to go to the grocery store. The groceries get delivered. All you're doing is disconnecting from this social, let's say, this metaverse, and feeding yourself, relieving yourself, sleeping. And maybe you have a family who is a real family that you interact with, but that's about it.
Or not. You can have a fake family. I mean,
Or you could have a fake family.
in the
And you
metaverse,
could be running a company. So you could be basically one of those 10,000 people mining coin.
Yeah.
That mining earns you money. You could be a content creator in the metaverse that earns you money. You never leave your, let's say, 4x4 space, but you could be a rock star in this metaverse. You could be creating decisions in companies. You could be making money without ever leaving your bed.
Yeah.
Right? But what kind of world would that be?
I mean, we live in that world now, Faizan. I mean, the famous movie about Facebook, social network. There's a quote. Justin Timberlake says this thing. He's in the middle of the movie where he's like, we used to live on farms, and then we lived in cities, and now we're going to live on the internet. And if you think about it, we do live on the internet today. I mean, we are doing everything on Facebook, Instagram. That's how we keep in touch with people. That's how we interact with other people. So it's already happening to a certain extent. The leap of faith that now permeates into other parts of society in finance, which is what's happening through crypto, or DAOs, what happens to companies, or NFTs, right, is not that far-fetched. And I think the question will be like, where do we find that equilibrium? When do we come back as people and say, okay, there's a place and time for this, and we need to also find balance. I mean, to your example, the Oculus is also allowing your employees and your company to be more efficient, right? They can actually interact with people in real time and make decisions right away without having to be in the office. So there is a time and place for it. The conversation we're having right now is thanks to the internet, right? We're able to have you not being in New York and me not being in Karachi. But I think, we'll need to be, as people, mindful of what is too much, and when do we actually prefer centralized intermediaries. Maybe they serve a function that we like.
So we're basically, I mean, as humans, we tend to swing, right, from one extreme to the other, and then we find our way, right? I mean, if you look at tech startups in the late 90s, I mean, literally anything with the .com title was raising crazy valuation, and that bubble burst. Then suddenly, let's say you look at the mid 2000s, and the real estate market and valuations there just went crazy, and that bubble burst, right? Mm-hmm. And then you had, let's say, coming into the pandemic, traditional businesses, sort of took a hit, but digital businesses and anything relying on digital exploded, right? And now that's sort of, I mean, in fact, groceries and grocery delivery exploded. Now it's kind of coming back and sort of tapering off. It's higher than it was in terms of e-commerce delivery, but it's lower than its peak, right?
Right.
And so what we're then saying is that this path, this move is happening. We are shifting, and we're going to go that way. But the question is, how long will the pendulum stay in that extreme before it moves back to the center? And if someone is planning a career in this, how do they time that shift of the pendulum so that they catch the upswing and they exit when it's before it begins the downswing?
Yeah. So impossible to time, right? I mean, if I could or you could, we could.
That's right. We wouldn't be here. We'd be on an island somewhere.
Right, exactly. Our own island, right?
Exactly.
we need to have our own. So in the current sort of trend towards blockchain and decentralization, Is there too much happening? Yes. Is it there's too much noise? Yes. Um, if you're thinking about, whether I should be in this, it's like, thinking about whether you should be in the internet in 1991 or 1992. Like yes, you will be. This will be a part of your life, so you might as well learn enough about it.
But
But
there was no school or college to educate you, right? Like, I mean, yeah, you saw it. I remember when we first got our internet connection.
yeah,
I mean, at that time, we couldn't, yes, we had IRC, that's how we communicated, right?
yeah,
And then MSN Messenger, then AOL Messenger, and so on and so forth. But we did not, at that time as teens, we did not see what we are seeing today. We did not think crypto, decentralized finance back then,
yeah,
So to say that, oh, you know what, just dabble into it and go all in, there was no one to teach us. There was no internet PhD. There was no, sort of a specialist in e-commerce back then. You
yeah.
just kind of stumbled into it and maybe you got lucky. So you're saying that, is that the course that someone should take for, let's say, crypto, blockchain, and this entire space?
Yeah, I mean, I think the answer is you should dabble, right? I mean, you should dabble in what
Side
will be
hustle.
the side hustle. It doesn't need to be money making. It needs to be, and I don't mean buying coins, because I think a lot of people get wrapped up in the what token should I buy? Is it going to make me money? I mean, actually go and interact with, get a wallet, get a token, go buy something using a token, use a Bitcoin,
I
see
have
if it's
muted Shiba.
buy a mutant Shiba, buy a picture of an ape for a lot of money, and
Only $52 million.
only $52 million for a picture of an ape. And I mean, all of that is a bubble, right? I mean,
Right.
all of that will go away over time. But I think if you're into this, or regardless of where you are in your career, I think you should interact with it. If you're young and you know um, are deeply interested in this, I think the one big area, or one big professional area where there will be a lot of demand for people, is information curation. And it's the equivalent of the IT person in the 90s, information technology. That was like the big career. Everyone went into IT.
Right.
So I think it's going to be that, because there's just so much like the things we talked about right now is like the headline of a 100-page newspaper that changes every
Yes.
day, right? I mean, it's just literally changing every day. So
I mean, I've
um,
downloaded Discord and I'm trying to keep up with conversations, and I've realized that, I mean, at this point in your life, right? Let's say you're post 30, post 40 with kids and a business and everything, you don't have that kind of time to educate yourself to become an expert, right? You need, and you're right, if there was an information curator that said, hey, you know what? There's so much information that was created yesterday, but here's the three pieces of headlines that are most important for you to follow.
right, a crypto bhai who
A
sits down
crypto,
with
a crypto bike.
वो आपको समझाएगा, भाई आप ये पढ़े, आप ये नहीं पढ़े, तो मैं ये हो रहा है
Yeah,
आजकल।
that's what we need. That's what we need. So that's actually a good career advice. Interesting.
I think, and I think that'll come, with people, as people learn about this. But I think that is going to be, and that'll come into public relations at
Yeah.
companies, the crypto firms. I think it'll be investor relations. I think it'll be news. I think it'll be anything. But people who can really delve into this and understand it, I think will be very important.
And I liked what you said. I think, the point, people kind of forget that, right? They're like, oh my God, I need to buy this coin. I need to make this money. I need to ride this trend. Oh, I missed out. Dabble, get a wallet, buy a coin, buy an NFT, trade an NFT. Just dabble, because just dabbling teaches you, right? Exercising decisions, spending some money. No one's saying go out and spend $52 million. Spend $100, $200, buy a fraction of a coin. And just by being able to do that, you start getting comfortable with what this is, what this means. And maybe it gives you ideas that you apply in your business. And maybe when the trend does pick up, you are primed and ready where your competitors might not be, and gives
That's
you an
right.
advantage.
That's right. I mean, the conversation we're having right now about crypto, most people aren't interested in this. So if you're even just dabbling in this right now, you're ahead of 99.9% of people who aren't paying attention to this. So yeah, I mean, it shouldn't be about money at this point. It should be about learning what will be the new version of the internet, right? And people are calling it Web3. The first iteration was Web 1 was when we grew up, Faizan, you basically went on a website and all you could do was read.
One-way information.
One-way information. Web 2 was you can create content, right? You can blog posts, you can create Twitter, you can add, this is the world we live in today where people are creating their own content. And Web 3 is you can read, write, and own, right? Own means you own everything about what you do in the metaverse and on the internet. You don't need intermediaries like Facebook anymore. You don't need Twitter.
Right.
You don't need YouTube. You create your content, you write, you speak, you do whatever it is, and you own that. That intellectual property is yours. And that blockchain technology has allowed people to do that. So, traditionally you need intellectual property lawyers to say, Faizan, this is yours, and you copyright all that. Now with blockchain, it's for everyone in the world.
There's 10,000 people in the room that validate it.
Exactly. The 10,000 people are saying Faizan owns this NFT.
Yeah.
And that is that's what's happening right now. So you can really own anything you do.
Amazing. Thanks. This was amazing. Loved it. I loved the session. I appreciate the time. This was the first serious conversation you and I have had in a very long time.
20 years.
Since we've known each other. Yeah. But this was good. And I think that this is important to understand because people they don't know where to begin, right? And I think that if they understand, they just dabble, just kind of pick up the basics, go create a MetaMask, download MetaMask, create an ID, create a wallet, link your wallet to a Coinbase account and a Binance account, an FTX account, buy some crypto, transfer it to your MetaMask, buy an NFT, spend $100, $200 for something, whatever, right? And then you start getting into it. And I think that for me is the big takeaway from this discussion because, we kind of burden ourselves from, oh my God, we really need to sort of get into this and make a ton of money. And then boom, you don't, and you get very upset and you walk away.
Right.
But the continuous dabble is, I think, where the opportunity is. And I think that for me was the big takeaway from this.
Yeah.
I appreciate the time, man. Thank you so much. Thank you for tuning in. Thank you for joining us. And thank you, everyone, for watching the show. This is episode 20 with Faraz Rana, and I look forward to seeing you in the next episode.